Jason, before the break, we were talking about, this rise in the cost of living and how some people might be tempted to cancel their insurance. I guess the other side of it is, should they be reevaluating their insurance policy with the costs of living going up?
For sure, I think there's a case for reevaluating it and being a legitimate concern that those who are underinsured are becoming even more underinsured with the rising cost of living. And at the end of the day, life insurance is meant in large part to replace your income so your financial dependents can cover their expenses if you were to die. Disability insurance is meant to replace your income so that you can pay your own expenses if something were to happen to you and you became disabled. And as the cost of living rises, as mortgage interest rates rise for anybody who has debt, arguably there may be a need for higher insurance coverage. Or again, those who are underinsured are perhaps more underinsured if they don't have enough coverage in the first place. So I think the rising cost of living, if anything, has a slight impact requiring more insurance coverage as opposed to less. And at the end of the day, anybody who's going without insurance is taking a financial risk.
Okay. Let's talk about insurance in particular for retirees when they're retiring, right? Do they need life insurance, and how do they go about evaluating the type of health insurance they need? Because typically, some might get a policy, like it's a group policy where they can save money, but that's not as common as it used to be.
Yeah.
Yeah.
For sure. So on the life insurance side, I would say that most people, by the time they've retired, if they're financially independent, they probably don't, quote unquote, need life insurance anymore from a risk management perspective. If somebody has an insurance policy and their health is poor, there may be a reason to keep the life insurance and renew it or convert it into a permanent life insurance policy because they know their health is poor, and keeping the policy might provide a larger estate value to their family and their beneficiaries than canceling the policy. But if somebody's in good health, they probably don't need life insurance anymore by the time retirement comes. And I think the whole concept of keeping insurance or buying insurance to pay income taxes is questionable. If somebody's got an extraordinary situation, like they own a business or something that's very illiquid, where there's going to be a whole bunch of tax to pay, that might be a situation to have insurance in place. But buying or keeping life insurance to pay the tax on your RSP, for example, I find is not an appropriate strategy. The money that you pay in premiums, if you just kept that money invested, you may well end up with the same or more money to eventually have your estate pay the tax on your RSP. On health insurance is a real interesting one. And I get that question a lot from people who want to know if they should go out and buy a private health insurance
Yeah.
policy. And the way I look at it, if you've got a group policy that you're a member of, ideally you want to be a heavy user in a company where lots of other people are not using the coverage. And then you might come out ahead and you might get more back from the insurance company than you pay in. But a private health insurance policy when you're in retirement, generally speaking, if you think about it, the insurance company needs to take more in than they pay out in order to
Yeah.
stay solvent. So it's not very likely that a health insurance policy in retirement is going to come out ahead financially for people. And I think most people are better off self-insuring and just paying out of pocket, particularly the fact that the big risk in retirement is long-term care cost. It's not a broken filling.
Yeah. And when we talk about health costs, we're talking about, covering dental or medical, very different than
For sure.
disability and critical insurance. Obviously, disability is not something you would get if you're retired, right?
Exactly. Yeah.
Yeah.
So I mean, health insurance that replaces your glasses or goes towards your orthotics. I mean, usually that's got annual limits in terms of what you can get back. The premiums are calculated in large part based on the likelihood of you claiming on certain things and how much you can get back. So there's really a limited benefit. Health, medical, and dental costs other than maybe prescription costs, are not likely to make or break you in retirement. Long-term care costs, again, there's long-term care insurance that
Yeah.
people can buy, but a typical health and dental policy is going to have limited benefit for
Okay.
people. So